Hi there, my name is Tyler Wen. I am an enrolled agent at Tax Help Office here on 115 North 4th Street in San Jose, California. If you have any tax help or tax needs, feel free to text or call me at 408 772 8981 or simply send me an email at taxhelpoffice@yahoo.com. I will answer your inquiries in the orders they were received. Now, for today's topic, we're going to talk about tax calculation involving child tax credit. Before we dive into the tax calculation of the video, we will go through what is child tax credit on a tax return. The child tax credit is a valuable tax credit claimed by millions of American parents every year to offset the cost of raising a child here in the United States. The credit is worth up to $2,000 per qualifying child claim on the tax return. In order for a taxpayer to claim the child tax credit, the taxpayer and the qualifying child must pass seven tests provided by the Internal Revenue Service. Now, we will go over some of these tests in this video today. There will be another video to go more in detail of what is qualify for child tax credit. First off, the first test is going to be age. The child must be under the age of 17 in order for a taxpayer to claim the child tax credit. Secondly, we have the relationship test, then followed by the dependent test. And fourth is the residency test. Fifth is the financial support. Sixth is citizenship test, where the child must be a U.S. citizen, U.S. national, or U.S. resident alien, and must hold a valid social security number. Seventh and final test will be the income test, where the parents must make below a certain amount of income limit in order to qualify for child tax credit. Now, for parents who are married filing jointly on the tax return, the total modified adjusted gross income for these parents must be below 400,000 in order for them to claim the total amount of $2,000 per qualifying child on the tax return. Now, for other taxpayers such as head of household or married filing separately, then their modified adjusted gross income must be $200,000 or below. Now, what if you're a head of household and you make $201,000, or if you are a couple married filing jointly and make $401,000? Well, there's something called face out. For child tax credit, the face out is going to be $50 reduction for every $1,000 above the modified adjusted gross income allowed. For example, the $401,000 modified adjusted gross income for married filing jointly would resulted in a total of $1,950 for child tax credit. Now, for a head of household filer that make $201,000 in modified adjusted gross income will receive $1,950 in child tax credit per qualifying child on their tax return. For the tax year 2023, the additional child tax credit or the refundable portion of the child tax credit will be worth up to $1,600, a $100 increase compared to the $1,500 refundable portion that was allowed in 2023. The problem we will be focusing on today is as follows. Joe and Jane are married filing jointly. They made a total of $175,898 from all income sources. The couple has one 16 years old child named Jack. What is their total tax with the child tax credit? Now, we know that Joe and Jane has one qualifying child and their modified adjusted gross income is below $400,000. As a result, we know that both Joe and Jane will qualify for the full $2,000 child tax credit that is available to them. So, the first step for the calculation of the total tax is to find the taxable income. Now, the taxable income is the difference between the adjusted gross income and the married filing jointly sending deduction, or the amount provided by itemized deduction. Here in this case, to make it simple, we will use the $27,700 MFJ standard deduction for both Joe and Jane. As a result, we see their taxable income is $148,198 for taxable income. So now we will look at the married filing jointly tax schedule, and we're going to put the taxable income we came up with into the row in which it lies in. Looking at the chart, we see that Joe and Jane's $148,198 lies within this row, the highlighted row, as you see here. Now, using the married filing jointly schedule from before, we will come up with Joe and Jane's marginal tax amount. First, we must calculate the couple's marginal taxable income. In order to come up with that, we will take the taxable income of $148,198 and $89,450, which is the lower limit of the income amount in which the couple's taxable income lies within. Now, the marginal taxable income is $58,748. The marginal tax rate in which they face for this amount is 22%. As a result, Joe and Jane's marginal tax amount will be $12,924.56. The total tax that Joe and Jane face before child tax credit is the sum between the marginal tax amount and the base amount of tax in which their income, more specifically their taxable income, lies within. Now, from before, we calculate Joe and Jane's marginal tax amount to be $12,924.56. And from the married filing tax schedule, we see that Joe and Jane's base amount of tax will be $10,294. As a result, Joe and Jane's total tax before the child tax credit is $23,218.56. Or in some case of software, like my software, their total tax will be $23,219. Now we come up with a step to calculate the total tax in which Joe and Jane face while considering their child Jack in the return. So we know from before that their total tax from their adjusted gross income is $23,219. We know that Jack is under 17. Joe and Jane's total income falls below the $400,000 threshold. As a result, we can say that both Joe and Jane qualify for the full $2,000 in child tax credit for their qualifying child, Jack. As a result, we have a total tax amount in $21,219, or more specifically, that $2,000 in child tax credit helped reduce Joe and Jane's total tax down by $2,000 from their initial $23,219. Now, if You have any questions for this step, feel free to pause the video to see the calculation or go back to the previous slide and make sure you understand the calculation. So now we can come to the conclusion and generalize this situation. We see that a married filing jointly couple with an income amount of $175,898 without any self employment income can expect a total tax amount of $23,219 before any credits, such as the child tax credit. However, if this married filing jointly couple has a qualifying child, then the CTC will decrease the total tax amount down by $2,000 to $21,219. This means that a married filing joint couple should withhold around $23,000 in order to minimize any tax payments that they face during the tax filings. I always recommend to withhold more than the total tax amount because this means that you don't have to pay any additional taxes when you filing your tax return. Now, the total tax amount can change depends on the number of qualifying child claim on the tax return. In this specific situation, if Joe and Jane could have two qualifying child, then the total tax amount would be $19,219 instead of $21,219. Remember, every child that is a qualifying child on the tax return will enable the taxpayer of up to $2,000 in child tax credit. Now, if you like this video, make sure to like the video, subscribe to my channel, and share this video to your friends so that way they can get more knowledge on their tax return when it comes to tax filing. I hope this video helps you in solving any concerns you may have. And I see you on the next one. Ciao.